What's up, everyone? All right, in today's episode, we've got a case study that I want to jump right into. A stock just hit the scanners, and right now it's actually 11 a.m., so it's a little bit later in the morning. Stock hits the scanners, it starts squeezing up, and all of a sudden, I've got to make a decision. Is this something that I'm going to jump into right here? So let's pull up the screen share and let me start breaking down for you my thought process. Now, coming into the market this morning, I knew that I was looking for a stock that was A quality for the small account challenge, of course. Now, CMCT, as it just hit the scanner a few minutes ago, is interesting because this is a stock that we actually talked about in the watch list yesterday because of the daily chart. The only problem I said is that it had really high volume here and has now had a couple very low volume days. So although it has a lot of room to the 200 moving average right up here, unless it has a strong catalyst, I just don't think that, it's probably going to make a big move. Having said that, you never know because look at the float. 600,000 shares, very low float stock, doesn't take an incredible amount of demand given the very limited level of supply on this stock, right? These are our 5 pillars of stock selection: price, relative volume, rate of change, news, and float. So CMCT meets all of them today except for no news and relative volume. So it's got 3 of the 5 pillars. The price is good, the percentage change is up nearly 50%, and the float is very low. So are those 2 things enough for it to work? And you know what? In a hot market, maybe, but in this current market, I didn't think so. So the first thing I do when it hits the scanners is I pulled it up to take a look. Now, it first halted up earlier today here, and it resumed with a big shooting star candle. So you see that candle there? That is a classic shooting star. A big upper candle wick with a smaller body down here. So it tops, it sells off, it comes back up, but this was a high volume red candle. So basically, as soon as this thing popped up and halted and resumed, people were selling, and that was it. But here we are, it's all the way up at $14 now. So it is definitely grinding higher. There's a little bit more volume that's just come into it. Is this something I should consider? And so I pulled up the level 2. And when I pulled up the level 2, this paints an interesting picture. Look at the spreads, 20-cent spreads. So now this is a problem. If I jump into this with a small account, let's just say right here, with this kind of spread, I mean, it's either going to be a big win or a big loss. It's not going to be much in between. See how that goes to 1432, 1441? What's up next? 1474 is the halt level, but look at the bid all the way down to 1375. You go from up 40 cents to down 30 cents. This is just a stock right here that's not trustworthy. The biggest problem is that although it's moving up, it doesn't have a lot of liquidity, and the relative volume is low. And when we look at this in the context of the overall market, yes, it's obviously, putting in a nice move here, but unfortunately, and now I can sort my scanner here by rate of change. I was sorting by volume just to see where the biggest volume gainers are. But when you sort by rate of change, you can see it's our 3rd leading gainer right now. But the spreads make it too difficult. Even if you had profit, you wouldn't be able to lock it up. So this is a stock where I said, you know what? It's just not suitable for the small account challenge. I wish it was, but it's not. So then should I trade it in my big account? Well, it's not really good for the big account either because I can't take big size because there's no liquidity. If I took 10,000 shares on that break of 14, for a second I would have been up 4,500 on the ask, and I wouldn't have been able to sell because there was no real volume. And then all of a sudden I'm down 30 cents on the bid. That's a $6,000, $7,000 swing. So this is one of those stocks that it doesn't work no matter how you look at it. It doesn't work for the small account. It doesn't work for the big account. So let's talk about the P&L for today. Today, I came in with high hopes. Day 1 of the small account challenge with Webull, and this is where the account sits as of right now. 0. I took no trades today. So that's a little bit disappointing. That's not how I wanted to start day 1. But you know what I do have? I have 2.5 hours of solid discipline. And I kind of said to myself, today I really have 2 choices. Given that the market is very cold, I could choose to reduce my quality standard and likely introduce some trades, or I could keep a high quality standard and have a no trade day. And I said to myself, which is better? Yes, I really do want to take a trade today. I want to break the ice, But on the other hand, I really only want to take a trade if I'm going to win, right? I want to feel very confident that I'm going to win. And if I take a low quality setup, it's kind of like a coin toss. That doesn't feel like it's worth it. Whether it's a small account or a big account, that doesn't make a lot of sense. So the other thing I said is that one of the most important things for me to preserve right now is high accuracy. I may not be able to take 10, 15 trades a day when the market's a little bit colder, but if I can maintain 70, 75% accuracy this week, even if I only take 3 to 5 or 10, 15 trades over the course of the whole week. Now, last week I took 40 trades. So, let's just say, for instance, so I take 30 trades this week. Okay, maybe it's not as many trades, but as long as I can maintain high accuracy, I'll feel confident taking bigger share size on those trades. Not bigger than usual, but just my typical share size, right? Because I'll know my accuracy is there. So I'll make a little bit less, but the worst thing I could do is lower my quality standard, take low quality setups, reduce my accuracy, which then hurts my profit loss ratio, which hurts my confidence, introducing more losses, and then forces me to also reduce my share size. Because then, even if we do have decent setups, I'm going to feel like I'm nervous. I don't want to lose more. I've already suffered a drawdown, so I've got to take my foot off the gas. Right now, I'm in a pretty good position. Last week, I made $97,000. 65% of it, a little bit more, was from Monday, which was a great day. The rest was from Tuesday, and then Wednesday and Thursday were slower. Friday was a no trade day. So I thought this week, because Monday and Tuesday had been really strong for the last 3 weeks in a row, that I could at least count on seeing some good action on Monday. Well, of course, I start the small account challenge and then it's crickets. This morning, there was very little to work with. Now, one of the stocks that I was paying attention to this morning was AMIX. AMIX hit our scanners early this morning. I'll go full screen here. And on this one, it first popped up right down here, and I pulled it up when it was at about 98 cents. And I said, this is a tricky one. Obviously, it's a little cheaper than I'd prefer, being below $2 a share. It's also, it's unfortunately lighter on volume, and it was initially when it first popped up there, less than 1 million shares. And I just sort of said, unfortunately, I'm already seeing some big sellers on the level 2. I think it's not going to work. Well, it ends up breaking through $1 and going straight to $1.10. And for a moment there, I felt a little bit of FOMO. I thought, maybe I should have punched it. This was the micro pullback right there. Micro pullback at $1. And I could have easily punched it. I was watching it. I thought, well, okay, $1 a share with $2,000 account. I could buy 2,000 shares. I could get into this right here. And this was my best opportunity today to get in at $1 and sell it, at $1.10. But the reality is, the entire move was to $1.15, $1.14 actually. So capturing that big of the move, usually when you have a move, I figure you get like half of it. So I don't even think I would have gotten the whole thing because it only hit $1.14 and then it immediately came back down to $1. Then it rallies back up to $1.12. So maybe I would have gotten out here at $1.08. All right. So, maybe $160. That would have been better than I sit right now. But trading a lower price stock with those big sellers on the ask, I just wasn't confident. And so I passed it up. I felt that was the right decision. It ended up dropping back down below $1, then coming back up to $1.24, back down to $1.05, back up to $1.30. And, it's interesting because it ended up having a lot of volume. So this stock right now, AMIX, as of right now has, this is unbelievable, 239 million shares of volume. That's a lot of volume. But as you look at the chart, you can also see a halt down right here, a nasty rejection right there. These ones are tricky. GLMD was the second stock that hit our scanners. This was also a cheaper one. And what was interesting was we had a hidden seller right here, and it was not able to break. So it ended up selling off pretty hard from $1.30 down to $1. No trades on it. I didn't trust it. It slowly rallies back up, comes back to $1.40, $1.50, $1.60. And I just thought, well, that's great. It broke through the hidden seller, dips down again, then it goes higher. Micro pullbacks. But again, it's cheaper. I didn't feel really strongly that it was going to work. I don't take a trade on it. Didn't want to take the risk. And then look at this jackknife at the open, just after the open, from $1.40 to $54, and then all the way down to $1.20. That's scary. Those types of moves can really hurt. So no trades on GLMD. And then we have, what else do we have? KXIN. Well, this one's awfully cheap. Yes, it's grinding higher, but it's just too cheap. PAX, this one, well, you pull up the level 2 on this, you'll see it's easy to borrow. Oh, and there's CMCT halted down, right? There wasn't much momentum going up, not enough to halt it. Well, I guess it did halt once, but in any case, now it's halted down. PAX, easy to borrow with the big green E there. 6 million shares of volume, but the float's 25 million shares. So we just had a lot of stocks today that were a little outside my standard pillars of stock selection. Price a little too low, relative volume a little too low, no news, float a little too high. And so all of that had me sitting here thinking, it's interesting because I've created the emotion around a small account. Day one of funding your account, you're excited to trade. You want to break the ice. You don't want to lose though, right? So you're excited to trade. You want to pull the trigger on something, but you also don't want to lose. So you sort of have these two forces where, you're eager, but then you're also a little bit hesitant. And today, hesitating was the right move. I didn't miss anything big. There's no question. I didn't miss anything big. But it was hard for me as we got further into the morning to accept that the odds of it being a no trade day were getting higher and higher and higher and higher the closer we got to the open. And another reality of trading in a cash account, which I'll probably talk about more in upcoming episodes, is that in a way, it creates its own emotion, which is that you're going to run out of trades, right? Run out of buying power. And so it makes you feel like, let's say I got into a trade and hesitated for a moment. Typically, I would just bail out. I would get out of it immediately, keep the loss super tiny. But I don't want to waste a trade, right? Because then I don't get that cash back till tomorrow. So instead of following my gut and bailing out, in a cash account, I'm more likely to hold potentially a loser or break-even trade longer to give it more time to work, which more likely will result in the loss getting bigger. And these are the challenges that small account traders face. It's interesting because it's like there's sort of rules designed to prevent, a novice trader from losing money in the market, and yet the unintended consequence are some of the emotions that come in when you're trading with a cash account, which is why I'm a big advocate of an account that has settlement margin. So you could day trade as much as you want, but has no leverage. Because leverage is where things get dangerous for beginner traders. You've got a $2,000 account, 6 times leverage. You buy a $12,000 position, and then, God forbid the stock drops 50%. You're now down $6,000. You only had $2,000 in the account. You've got a $4,000 margin call. That's scary. You never want that to happen. But a $2,000 account that has settlement leverage margin, where you can just day trade as much as you want with the cash that's in there, that would really be sort of the perfect situation. And you can get that, but not till you're above $25,000. And so anyone that's trading with a small account ends up getting forced to do things that are a little higher risk, like trying to trade options that could double their account overnight, trading penny stocks, or buying and holding instead of following your gut and getting out when something doesn't look good. So today, I maintain discipline. And if we think about it, that's 2.5 hours of discipline. That's pretty solid. 2 hours of, it was 3.5 hours. I sat down at 7 a.m. and I was here till 10:30. It's 11:15 now. So, I was sitting here for 3.5 hours, holding the line, being patient, saying, no, I'm not gonna jump in something that's low quality. So, so let's see. So 3 hours, so 3 times 6 is 18. So 180 minutes, so plus 30. So 210 minutes. 210 minutes of sitting here holding patience. 210 minutes. So 60 seconds in a minute. So 2 times 6 is 12. So 12,600 seconds of sitting here patiently waiting. That's a lot of patience, 12,000 seconds of patience. And every second counts, because as I was sitting here, it only takes a momentary lapse of judgment to jump in something and then boom, big mistake. So today is a no trade day. It's a no trade day in my main account, as you can see here. And this is the funny thing, even the lower price stocks, I was like, well, I could buy 50,000 shares of this in my main account. What's the upside? I make 5 cents a share, maybe. but I pay commission in my main account. I'm not using a commission-free broker. So the commission typically ends up being 1 penny from every trade. So 5 cents, well, it's really only going to be 4. Or if let's say I only get 4 cents, it's really only going to be 3. 25% of the profit goes to commissions. But if I lose 4 cents, you add 5 because it's the 1 penny of commission. So it's like the risk to reward ratio is negative. It's inverted. It's not worth it. And so I just said, no, these ones aren't worth it, even with big size in the big account. So, here I am. I'm disappointed, but there's things that I have in my control, and that's being disciplined, my quality standard. And then there's things that are totally outside of my control. How hot will the market be? Will we have multiple stocks going up 100%, or will there just not be big catalysts? And one of the things that some people were speculating, was how much the government shutdown was, causing the slowness in the market. And I think that there's, that does definitely has there's some role that played. Certain types of catalysts that require or involve government agencies obviously wouldn't take place if the government is shut down. But the government reopening has not turned the light switch back on. What is interesting, though, is how last week we had GLTO and MOVE both give us huge moves. GLTO pulling back a little bit today, red day, no trades on that. CMCT from last week, obviously if it has news, that could give us something. So right now we're kind of in between themes, in between hot cycles. I suppose if anything, the theme right now is a little bit more centered on penny stocks, lower price stocks. That's tough because I don't usually like that theme too much. I don't usually do well with it, although it could work for me for the small account. But, again, the ones that we had today, none of them really were that great, in my opinion. So I'll have to think about what I do with that. But right now we're, kind of just having to batten down the hatches. We got to get through this period. There's no other way. The only decision is whether I get stubborn and I just take a bunch of low quality trades just for the sake of trading every day, or if I stay focused on discipline, focusing only on stocks that meet all 5 pillars of stock selection. And even within the 5 pillars of stock selection, there could be a stock that's like, $19 a share and has a, 19 million share float and is up, exactly 10% with a boring news catalyst, with relative volume of 5.1. So it like just barely meets the cusp of all of my parameters. And technically, is that a stock that I should trade or could trade? I mean, it meets all 5 pillars, but realistically, I probably shouldn't take those trades. It's probably not worth it. So this is where we're at today. And I think it just requires a degree of radical acceptance and gratefulness. I'm so grateful for the opportunity to sit down and trade every day. I'm grateful for the opportunity to keep learning more about the market. And I know my time will come again where I'll be able to lock up some big trades. The most important thing I can do right now is keep my account off of the risk, right? Keep my account kind of flat so it's at least not going down. So risk off, right? Slowing down, being patient, but keeping the quality standard high. And if we do have something that sets up tomorrow, boom, awesome, fantastic. Who knows? I could have another $50,000, $60,000 green day like I had last week, maybe bigger. So I'm still feeling confident when I see something that looks good. I'm just disappointed that we're not seeing more of those opportunities each day. But like I said, there's nothing I can do about that other than just accept this is the market we're in, and it's always about the ebb and the flow. The good news for you is that this is a great time to be learning. If you're not trading because there's not a lot moving, go back and study the live trading archives of all of those big movers that I've been trading, because then you can see, all right, when it's hot, this is what it looks like. Study those, watch them, rewind them, just pause it, really get dialed in. What are those subtle cues I was looking at that encouraged me to have, or gave me the confidence to double up my position, right? Or gave me the indicator that I should jump out. The more you study those hot market trends and those hot market days, the better you'll be able to capitalize on them the next time we go into a hot cycle. So that's the best use of your time. And so today, kind of a short recap because there's no trades. Technically, it's day one of the Webull, day one of trading. But, like I said, no trades. So we'll just try again tomorrow. All right, so I'll be back at it bright and early, 7 a.m. Eastern Standard Time. I hope to see you guys there. If you have not, by the way, already subscribed to the channel, make sure you hit that subscribe button. I hope you hit the thumbs up. And reminder, trading is risky. My results aren't typical, so I want you to manage your risk by practicing in a simulator before putting real money on the line. If you want to check out a couple other episodes I've uploaded to YouTube that have been popular, they are posted right here. If you want to do the 2-week trial and watch over my shoulder, and you can still listen to my market commentary even if I'm not trading, the link is pinned to the top of the comments and in the description. With that, I will see you guys tomorrow morning at 7 a.m.